things that make Miele forever better.
Hello and welcome to Your Property Empire. I'm Chris Gray. On tonight's show, can a church make a good investment property, or should it be a home purchase for the sinners out there that need to turn their lives around? Now, how risky is it to invest in property in Canberra if there's the likelihood of a change in government? And with a positive change happening in the general property market, could now be a good time to get back into the holiday home market? Now, these stories and more in the next 30 minutes. But first up, some say property tends to double every 7 to 10 years. But is that true? And is it true even for our top-end properties? Now, reports in this week say that Altona at Sydney's Point Piper sold for a massive $53 million, having previously bought for $28.5 million in 2002, and that represents about an 86% rise in 11 years. Now, joining me tonight to give his opinion on our topics is Charles Tarbey, CEO and owner of Century 21. Now, Charles, that's got to be a pretty good result and not a bad cash inflow for the year.
Yeah, when you look at the potential commission that agent, I've got to think in terms of commission, sorry. But, you know, when you look at that property at 53 million, it was an overseas buyer. And so, you know, it's still not telling me that the top end is great here right now. I think there's a fair bit of work to occur there yet. So it's money coming in from overseas, and they look at the Australian market, see it's still solid, see it's still growing, so I think that they're investing pretty wisely. But it sold for how long ago? Just a few $1 million. Many years ago, so...
Exactly, and I guess the big thing is that it's been on the market for years.
Yeah.
I mean, whether it's been officially on or unofficially on. And so, again, if you had to sell that overnight, you might only get 20 million for it, but if you can hold on for the right buyer,
yeah,
you don't lose your money.
On the market for 55 for a while, so I think sold for 53, so, I mean, yeah, that's pretty great. That's a really great result in what they're calling a pretty tough market at the top end.
Exactly. So, if you had 50 million, you didn't buy it, sorry, you're going to have to wait for a while. Now it's now time to evaluate potential property in this week's Purchase or Pass. Now for tonight's Purchase or Pass, we've got a very special property that's like no other potential investment we've ever featured. It's a church, or shall we say it's a converted church. Now it's a 3-bed, 2-bath renovated property, 65 kilometres from Adelaide CBD. It was built in 1871 and the last service was performed in 2007 before being converted into a stunning home. Now there's no garage mentioned, but if it comes with a church car park there should be enough space for about 50 cars, you would have thought. Now the property has been completely rewired and replumbed and features very high ceilings and the original church bell to get you up in the morning. So Charles, I guess a bit of a unique property. How well do those properties generally go down in the market?
Well, this is not a good time for that kind of property. It's still back in the discretionary area of spending, because even though you could have it as a home, it is one of those properties that is still a distance away from the major capital cities, and it's a property that is incredibly unique. And like you talk about with a church, I mean, I feel a bit uncomfortable about sleeping in a church, knowing, you know, perhaps there were funerals and so on.
You've had a very clean life.
I have had, but the only thing I'd be frightened about is having to confess every morning. To get up and do a confession every morning, I don't think I'd get by after a week. I'd be gone. But I think it's a wonderful property in a wonderful area. I know where the location is, so it's a wonderful spot. But at the end of the day, it's got to be really something you either really want to buy and like, or a property that you're just going to take a bit of a chance on.
Because, I mean, obviously, say in Sydney's eastern suburbs, there's some big graveyards there right on the coast, and a lot of people say, no way I'm doing it, but this is, you're actually living in there. Yes. So for certain religious groups, I'm sure there's no way that they can live in a church.
Absolutely no way they will, and that's part of it too. You're limiting the number of buyers you got. It's as I mentioned, further away from capital cities, so you're again limiting the number of buyers. Also, financing it, I'm not quite sure what the rules might be on that. So,
now, when it comes to rental, if it's all been converted, there's no reason you can't rent it out like a regular property, is
it looks great, and I'm sure that you could rent it out like a regular property, and I think it would be quite a novelty for some people to live in and rent in. But, you know, if you were to ask me whether I'm going to buy it, you're going to ask me, aren't you?
Well, I was just, the first thing I was going to, or the last thing I was going to say, there's actually a set of toilets outside. I mean, that's going back in the day, isn't it, when you used to go outside to the toilets? Can you remember those days?
I do, yeah. I told you, I grew up in Crookwell, you know, we had an outside toilet there for a while.
So purchase or pass for you?
It's actually a pass for me, not for what it is, but because I think I could find something better.
Sure. Now, I love properties that are unique, and I don't think you can get much more unique than the church. At least it would give you the option of sitting at night, and then you wouldn't have to go too far to repent in the morning. Look, it's definitely not my ideal location for an investment, but I'll give it an emotional purchase. That's definitely an emotional, not what I normally do, but maybe have it as a holiday home or something like that. I think it's pretty fun, and the price tag compared to a Sydney property is pretty cheap, but maybe not the perfect investment. Anyway, now we're joined by our resident expert from News Limited, Tom Panos. Welcome, Tom. How are you doing, Tom? Is a church something down your street?
Well, it's Good Friday for Greek Orthodox people, so I'm going to say yes, just to be on the safe side.
It is. Christo Anesti, Tom.
And Charles, I've got to say, you were the first person to actually send the news out to the Greek community and real estate agents today, so thank you very much.
That's
God
okay,
bless
Tom,
you.
I do remember. Thank you.
Good stuff. What have we got for us this week? Because you've been over in Western Australia, haven't you, Tom?
I've been in Western Australia, but we've picked a property, well, we've picked two properties today. The first one's in Queensland. There's only 3 left here in this block that is in a area called Paradise Point. It was featured in the Gold Coast Bulletin. The reason we picked this was that it's 15 minutes drive into surface, so you're away from what many people would call the rat race, but in fact, we're talking about an area that is had good interest in recent times. I like it because any block that's got pet friendly seems to get a lot of ticks with buyers these days. And at $399,000 starting off with $400 per week rental income, it definitely should attract the interest of investors. Speaking to Steve Tarbey from the professionals, he said to me it's 100 metres from the beach, right at the cafes and restaurants, so this is going to appeal to both owners and investors. They've sold very quickly. There's only 3 left, and body corporate rates of only $33 per week means that we've picked this as something to look at.
Charles, you know everywhere in Australia because you seem to have a branch everywhere, so any ideas on that at all?
Yeah, look, it's not, from memory, it's across from Ephraim Island, and that's an area where they developed all through there, lots of apartments and shopping complexes and restaurants and so on. And it's right, it is north of the rat race, as Tom put it, so it's a much quieter area. But I like the Gold Coast all across at the moment because, as we know, we talked about that before, and if you look at Brisbane prices in the last cycle, they're the ones that are still struggling a bit, which means there's some upside in there, and the Gold Coast especially, or north of the Gold Coast, I think has got some good opportunity.
Okay, and number 2, Tom?
Number 2 is in Northbridge, which is essentially a 5-minute drive to the CBD. It's a block of 4 units. I've always been a fan of block of 4s because I think that they not only give you a good rental return but good capital growth, particularly when they're Art Deco. And that's what this block is. It is presented by Joe Leonardi from Rain and Horn at Petersham. The original features come throughout. We're talking about a rental return of about $115,000 a year gross. The good thing is, Chris, that they've already done the fire rating for the strata compliance, so they've still got to do a bit of paperwork to get it through to be subdivided as strata units. But strong capital growth, low vacancy rates, 5 minutes to the CBD, great bus services from Northbridge, so you're going to get into work in no time. This is going to appeal to both first home buyers if they were going to buy a unit close into the city. It's going to appeal to people that are looking to buy an investment block of 4, so it ticks all the boxes, and it is DA approved for immediate strata conversion. We've always talked about blocks. Blocks of 4, there's lots of buyers for them. Blocks of 8 and 10, you've got less buyers for them. So that's why we've picked this one. Price guide, $1,900,000 plus.
And Charles is certainly nodding his head in the background, just like you have those dogs in the back of the cars.
I think Chris is a buyer for this one, Tom. Now, what is Joe Leonardo? He's a great real estate agent. What's he doing in Petersham, selling a property in Northbridge? Must be one of his established Greek clients. It's got to be Happy Easter for him too, or is he Italian?
Well, Charles, you know what it's like for buyers? It's location, location, location.
Yeah.
For real estate agents, it's commission, commission, commission.
Well, we did talk about that at the start of the show, actually, Tom.
Hey, look, certainly, I mean, we've always got stacks of clients. Everyone loves the thought of owning a block for themselves, but most of the blocks are at least 6 units, 600 grand. It's like $3.5–4 million. So certainly $2 million. Yeah. It's affordable if $2 million can be affordable.
It's very affordable. I mean, you could put family members in there. You could have your own 4 apartments instead of having a big house with.
No, that's lesson number number one.
So
you
many
never put your
bedrooms.
family into investment property. You never get paid, do
No,
you,
you
Charles?
live with them. You live with them.
Okay. All right, good to see you, Tom. I know we've got some other stories, but we'll have to catch up on those next week.
No problems.
Good to see you.
See you, Tom. Happy
See you
Easter,
later.
mate.
Thank you. Bye-bye.
Now, after the break, we'll be solving a viewer's property investing strategy question. We'll be back soon.
I love flying. Every minute counts, huh?
Sure.
I bet you're thinking you wish you had more people on the ground.
Exactly. Someone who could help me in every country would be good.
I'm thinking maybe you already do.
With business bankers wherever you're doing business, no one connects Australia and Asia Pacific like ANZ.
I think I might watch a TV show.
Oh, I know a good one.
Miele washing machines are German engineered and tested to the equivalent of 20 years usage. How do we know? Because the same engineers who design and build them then test them by opening their doors 60,000 times, then running them for the equivalent of once every day for 20 years, through 10,000 hours. So we don't just say Miele washing machines are tested for endurance. We know they are. It's one of the things that make Miele forever better.
Welcome back to Your Property Empire. Now, Michael from Canberra emailed during the week and he asked, there's a lot of talk about 20,000 jobs to be slashed in the public service over the coming year with the likely change in government. As the public service is the major economic driver for Canberra, my concern is that the bottom will fall out of the Canberra property market in the coming year and the vacancy rate seems to be on the rise. Now, from watching your show, I know you always say that the right time to buy is when you have saved a deposit rather than trying to time the market. Now, I've just had an offer accepted on an investment property, but I haven't yet exchanged. I've asked for advice from a number of people who have all told me to ditch the property as the market is likely to drop further if the Liberals get in. So I guess this is a classic story of a one-industry town. Now, would you qualify Canberra as a one-industry town?
Well, it's got a lot more going for it than just that, but, you know, it does appear that way. And I do remember a lady rang on the show once before, ages ago, and Canberra, it's absolutely correct. It's hard to say it, but when the Labor Party comes into power, it's fairly well known, this might offend a few people, but it's fairly well known that the public service grows in Canberra. And then when the Liberals come in and they cut it back. So I can see what, I guess at the end of the day, what's being asked. However, it's a cycle in Canberra, and the Liberal Party will also have to come back in, and when they do what they do, they'll then have to start adding people as well. So it's a cycle. Maybe you're feeling right now that you shouldn't be buying at that cycle, at the bottom of that cycle, but I don't think there is an issue right now.
Okay.
I think there will be an issue, but it's only a little bump in the road. You've got to stay in there for the longer term.
And so if we expand it out kind of across Australia, what is the issue with one-industry towns from a real estate perspective?
Well, it's always scary. The mining ones are the ones that come to mind straight away, and they always concern me, especially with what you're seeing now. And you look at some of those areas with the Olympic Dam and so on in South Australia, there's a tremendous amount of investment by private individuals who went in and bought land and thought they're going to build blocks of apartments to cater for people coming in to work, and they shut that down. So there's a lot of people being destroyed there. I think Canberra's a little beyond that, but I get your point, but I think Canberra's probably a little bit further down the track than just a political town.
Because the dilemma for a lot of people, whether they're first home buyers or people that have been in the industry for a long time, is, say if you're in somewhere like Canberra or a mining town, you know your area, you know what's going on, but if it's not the best area, you might not get the growth, versus going to a Sydney, Melbourne, where there's stacks of industries, but you don't know what you're doing and you're not feeling the market. It's a bit of a dilemma, isn't it?
Can be, but I think with Michael, he should be very happy with the fact that I think if Canberra is going to cause any issues across the country, the last place that they will close down will be Canberra, because they'll all be there doing the job right to the very end. So.
And look, I guess the final question, he said he'd been asking a lot of people for advice.
Yeah.
Who are the best people? Because most people turn to family and friends, but are they the right advisors?
No, and I think also, even when you talk to people who appear to be the right advisors, Chris, they may not have had the experience. I always like to ask people when I'm asking for advice on buying an investment property, how many investment properties do you have? What have you done? You're going to give me advice. Tell me what you've done first, and I think you need to do that. But look, that market is still very strong, and I think that if it's in the lower end and at the right price, I don't think that there should be any concern at all with the market falling out.
So good advice from wealthy people rather than the poor ones.
Good advice from people who've been there before. Yes,
okay.
Absolutely.
So I hope that helps with you, Michael. And again, look, it's 50-50. It depends on exactly where you're coming from. Now, for more information on investing in your home state versus interstate, you can download a copy of my book for free. Just go to yourempire.com.au. And if you'd like our opinion on your strategy, just send us some details to chris@yourempire.com.au, and we'll always try and answer pretty much every email we get. Now, on our guest interview tonight, we're going to be discussing holiday homes as investments. Now, we've obviously seen over the last few weeks, there's obviously a few kind of green shoots out there in the market. Holiday homes then kind of come in after that, so is now maybe a time to be looking at those kind of things?
It depends. Again, some of the holiday areas are still in decline. The further and further out you get from the major centres of holidays, there's still work being done there in terms of pricing. And I also think that the market itself in the general capital cities hasn't recovered well enough yet before we move out to those areas. You've still got every agent around the traps you talk to in major capital cities will tell you they've got very little for sale and they're selling everything that they get. So that is a great start, but that hasn't quite filtered out. And also, if there's an influx of properties coming on the market because a lot of sellers have held off, which has been the case, then we've got to get through those before you start filtering out into the holiday areas.
So I guess the question is what kind of things should people consider before buying that kind of investment, and is it actually an investment or is it really a luxury kind of purchase?
Generally is a luxury, and of course, you know, when you get into trouble in life, you've got your family home and you've got your holiday home, the holiday home's going to go first, and all of a sudden you find that everybody you're talking to that had a holiday home is also selling it at the same time, so that increases the number of properties on the market and it reduces the number of buyers. So that's why the discounts have occurred. I think holiday homes are becoming a very, very good investment, and especially if they're around major centres. That's what I was saying. If they're a bit further out from there, I still think there's a correction going on with those.
And so it's really important to speak to the local agents, and I guess, are they going to tell you exactly what's going to go on?
Look, the local agents will tell you, but you know what it's like. There's so much information around now. You can tap.
That's the problem, though, isn't it?
Yeah, you can tap away and you can find out so much information. In fact, as a real estate practitioner now, I would find it so hard because educated buyers and sellers, they're going to be telling me what's going on often, you know, and they can use that in a very, very strong way to actually reinforce their position with the real estate agent. So there's not much a real estate agent can say today that can't be close to accurate without getting into trouble.
And be reconfirmed. So I guess the last question is really, where are you going to find low vacancy and high capital growth? Where do you start?
Well, you know, you don't find it the further you get out of town. I mean, it's the way it is. And there's an area that you know yourself where the higher the price property, the lower the return is going to be. So it's always in the mortgage belt, it's always in that mid-price range, it's always around the capital cities and the centres that you're going to get capital growth and rental return and not be penalised if the market changes too much.
And again, almost kind of semi-right off the money to say, look, this is a luxury purchase. If I get a return, so much the better.
But you never know, you might find a world in holiday homes right now. It could be coming up for you and your investors. It could be the right time.
I'd love a church right on the beach.
We know where a church is, but it's not on the beach.
Actually, there's one up in Darwin, I think. Is it Darwin?
On the beach.
There's a church right on the water.
Yes, you've got problems.
Yeah.
You've got problems.
All right, after the break, we'll be finding out what's happening with the latest property numbers. You're watching Your Property Empire.
Hello, I'm Margaret Lomas, host of Your Money, Your Call and Property Success, and I'd like to tell you about my annual seminar series happening across Australia in May. If you enjoy the education I'm providing through my shows, you'll love the chance to find out how to become a better property investor. I'll be discussing the 2013 property market and, of course, providing my entire list of 2013 hotspots. Wherever you are in your property investing journey, you just can't miss this fantastic evening. Joining me on stage will be Legal Eagle Rob Belander and Rob Farmer from Run. There'll be tons of question time and an abundance of great information. Tickets start at $40 and this isn't an introduction to a more expensive workshop, so you can expect to get tons of education right there on the night. Places really are limited, so go to the address on your screen now and secure your ticket. I know you'll be glad you did.
Welcome back. Now it's time to take a look at the latest property numbers, and Charles Tarbey.
Yes, very good. Steady again, steady as she goes. The average across the country, 64.5. So we've been in the 60s now for quite a great many number of weeks. But if you look at the chart overall, you'll see that it's spiking up again, and that's a great thing. So actually Sydney had 70.1%, Chris, and that's had 70s a couple of weeks now. And Melbourne was at 68.6%. So those two capital cities, which is the one where you see most of the auctions, have been so strong and so steady all the way through. So I think it's still moving in the right direction. It's not in the late 70s, early 80s, which I think is fine, but the actual consistency is there. So we're seeing something that we have not seen for a very long time. It wasn't like this time last year.
And do you think the general public are getting the message? Because it takes a while, and there's always competing stories in the newspaper, good news and bad news. But when you get this much consistency with the clearance rates, do people finally start picking it up?
I think they do, but then you get the noise that, oh, we might get an interest rate reduction next week, or we might not, and so people start thinking, oh, well, maybe we should wait. And then there's not a lot of stock on the market right now, so people say, oh, if I go out there, I'm going to be paying more at auctions. There's always something. If it's not the grand final, or if it's not the long weekend, or something else, there's always something. But in this circumstance, we've had consistent auction clearance rates now for a few months, and I think people need to really start thinking about that.
And that's what Michael picked up in the viewer question, is generally the thought on the show is you buy when you've got the cash to buy, rather than trying to time it, because there's always going to be some news that's out there, whether it's the election or interest rates or whatever.
But you just can't hide what's happening.
Yeah.
At the moment.
So again, big question, homes advertised for sale?
Well, that's actually something that's driving it too, possibly driving the clearance rates, and maybe even driving some of those auctions where you're hearing about the fact that we're getting over reserve. We've gone negative 2.6% this week over this time last week, and it was negative last week over the week before, only small by 0.19, but it's been in negative territory again. And there are a significant number of sellers who are saying, oh, it's probably the wrong time to sell. But if you're selling a $600,000 home and buying an $800,000 home, you really need to start thinking about selling, because the $800,000 home is going to go up quicker than a $600,000 home.
And again, it's the right kind of properties, because we've been going to auction, we've been trying to buy properties before auction, we've been getting gazumped.
It's auction. It's called auction.
Auction, yeah,
auction,
I can never say it's the English for me. But it really does depend. So some we've got to fight really hard for, and then we say goodbye, someone pays emotional money, and other ones...
And you're going to be confronted with that quite a lot until some of the stock comes on the market. And it's just not looking like it is right now. As I mentioned at the start of the show, everybody we're talking to, all the agents, are absolutely screaming for more stock to come on.
Now, rent's obviously an interesting thing. I think we mentioned before, NAB came out with under 5% fixed-rate mortgages, which is good. So if you're getting some rents and the rents are rising...
Rents are quite nice, although, you know, Sydney was steady at 10.7, Melbourne dropped slightly at 7.15, increase from 7.17 last week. But the big one, Perth was 15.92 last week, and I said to you I thought Perth was going to drop, and I had to announce the 6 greatest words in the English language. I admit I made a mistake. Well, Perth dropped, and it went down to 15.76. Now, that's the first time Perth has gone in negative territory for probably the last 6 months. So I think Perth is on its way slightly down, so that the rents themselves are sitting at 11.2%. This time last week they were higher than that as an average. So they are coming backwards.
But still, it's all positive when you look over the year.
It's still very positive, but people have to get used to the fact that there's some top-end properties in Perth that are coming back on the market again, and they won't get the price they were getting. My view. That's my view.
And both the rents and the capital growth, they can never rise forever, so there's always got to be change.
There's always got to be change.
Yeah,
it's coming through.
So finally, we've got the vacancy rate.
Yeah, vacancy rates have climbed. They're up 2.7% this week overall across 3. And the two capital cities that really started to climb, Sydney went to 2.3, and Melbourne at 3.47. But Perth itself, it's sort of sitting there steady. It was slightly higher, but really just on the level now. So once it starts sitting on that level, those things we were talking about might start kicking in. So the vacancy rate's 2.7 for the week at the moment, still under 3%.
Wonderful. So again, it's still all positive out there. Whatever happens to interest rates, look, it's something that's going to happen.
It won't really matter, Chris.
Yeah.
It won't really matter.
Nah, it's always good to have you for half an hour rather than your normal 2 minutes, Charles. So good to see you again.
Thank you very much, Chris.
And thanks for joining us at home. Until next week, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional.